Hello, welcome to the FBAR and 8938 Basics. My name is Paul Hogue. I'm a current employee here at Canopy Tax. Before we jump into this course about the FBAR and 8938, just wanted to give you an introduction to myself. So I've received my bachelor's degree from Utah Valley University. I'm currently working on my master's of business administration, working to get my CPA license here within the next year or two. I worked for 5 years in a mid-sized tax firm specializing in expat and inpat tax. So FBAR and 8938 are pretty much my go-to. I've done many of them, and so I really love this topic. I work here at Canopy as a subject matter expert. We have a lot of great technology coming forward, and I thought that this was like a once-in-a-lifetime opportunity to jump from being a tax preparer into the actual tax tech industry, because this opportunity just doesn't ever really come up. I've never heard of such a thing as creating tax software and technology to help tax accountants. So I thought that I should make this move over here to Canopy, and I still prepare taxes on the side, and so I get the best of both worlds. So I get to test basically, the technology that we create and get to use that as a professional as well. So it's fantastic. Outside of my profession, I really enjoy sports of all kinds. 3 major sports: basketball, baseball, football. Watch them, and I play them all the time. And I really enjoy camping and being with my family, riding four-wheelers and motorcycles and so on. So that's a little introduction about myself. Jump into some of the course objectives here. So for the FBAR and 8938, I wanted to really bring to your attention and remind you or help you learn who, what, when, where, and why individuals are required to file the FBAR and 8938. And I hope by the end of this course, you will have some very clear examples and information at your fingertips to help you be a lot more helpful for your clients and even possibly for yourself. So let's jump in here to what is the FBAR. So the FBAR is an acronym, and it is short for Foreign Bank Account Report. And so that begs the question, okay, what is a foreign account? And so a foreign account is a financial account maintained by an institution physically located in a foreign country. So the first question or thought that comes to my mind when I think about that, well, what if U.S. Bank or Wells Fargo happens to be in China or Japan or some other foreign country? Is it considered a foreign account? And the short answer is yes. And so if I have a bank account located in Japan at a Wells Fargo in Japan, that would be considered a foreign account, even though it is a U.S. bank. Next, what report do we use to report this financial bank account? And right now it's called the FinCEN 114. So FinCEN is the Financial Crimes Enforcement Network, and they just use the number 114. It's kind of in sequence with some of the forms that the banks are required to file along these same lines of foreign bank accounts. It was formerly known as the 90-22.1, and that changed as recent as 2013. That they changed it from the 90-22.1 to the FinCEN 114. So now that we know what the FBAR is, let's get a little bit familiar with who is required to file the FBAR. It's U.S. persons, but how do we define that? Well, there's really 5 different classifications of a U.S. person. The first being a U.S. citizen, which is someone who's born here or who has, earned citizenship over the course of time, going through the visa process and green card process. So a U.S. citizen is required to file regardless of where they live. So I could be a U.S. citizen and living in New Zealand for the past 20 years. But if I never renounce my citizenship, well, I'm still considered a U.S. citizen. So I am required to file this report. Next is a resident alien. So someone living here in the United States. Could be someone with a green card, could be someone who has passed what's called the substantial presence test. So if they live here in the United States for 183 days or more, and that test can span over 3 years, but I won't jump into too much of the details of that test. So if they pass the substantial presence test or are visa holder or green card holder, they could potentially be a resident alien. Recently, as of 2016, I believe, trusts, estates, and domestic entities are now required to file this report. Before that, they were not required. I remember, basically only filing this report for individuals for most of my professional career, the 5 years that I had spent in the mid-sized tax accounting firm. Okay, now here's kind of a test question for you. So if you're on another page right now, tune in. Are resident aliens of U.S. territories required to file this report? Okay, so kind of like what I was talking about, resident aliens being green card holders or passing the substantial presence test. So U.S. territories being Virgin Islands and so on. Are they required to file this report? And the answer is yes, they are required to file this report. Okay, now that we know what and who, so what the FBAR is and who must file the FBAR, let's talk about what determines a filing requirement. And I want to take a short little cut here and say that here at the end, after we go through all of the information about who, what, when, where, and why we file the FBAR in 8938, we have some great examples. So stay awake during this. Make sure you understand all of the basics here because they will be tested in the examples. Okay. Next is what determines a filing requirement. So a U.S. person, as we defined before, those 5 different categories of U.S. persons, if they have a financial interest or a signature authority over a foreign account with an aggregate of $10,000 at any time during the calendar year, they're required to file this. So let's go into one example, which is probably one of my favorite examples from my professional career. So I had a client who lived in the Philippines. He had a one-time, almost like a 1-hour transfer to his bank account, and he got about $15,000 US, and it was to buy a car. So his company had transferred money into his Philippines bank account, and it was only there for literally like an hour or two, and then he had spent the money. But because he had over $10,000 US at any time during the calendar year, he was required to file this report. Of course, the report only ended up having one account on it, but he was required to file this report, and he was not aware of this report until we had made him aware of that. And so there are some interesting circumstances in which people need to file this report. Now, another example that a lot of clients misunderstand is the aggregate, which is, most of us accountants understand this word, but some clients do not understand it, which is if I have 4 bank accounts with $3,000 US in each account, I have an aggregate of $12,000. And so I am required to file this report and report all 4 bank accounts on the foreign bank account report. Hopefully these 2 examples, help the clarity on determining whether or not your client has a filing requirement. Okay. Now getting into the specifics of terminology, which is what is a financial interest and what is signature authority. So I pulled this directly from the IRS website, and let's go ahead and I'm just going to read this directly to you. A financial interest means that you are the owner of or record holder of legal title. The owner of a record or holder of legal title is your agent or representative. You have a sufficient interest in the entity that is the owner of record or holder of legal title. And then signature authority, you have the authority to control the disposition of the assets in the account by direct communication with the financial institution maintaining the account. This is where some people have a hard time determining whether or not the account is theirs and they should report it on their foreign bank account report. So signature authority, it could be your child's account. It could be an account that your client's employer allows you to have signature authority on. So some of the examples that I have are cases when employees are sent to foreign countries and they are executives, high-level executives, and they have signature authority on sometimes tens of hundreds of accounts. And we had a specific case where someone had signature authority of upwards of 60 accounts because they were that high level of an executive. And so they had to get all of the information for all 60 of these accounts and report them on their individual foreign bank account report, which can sometimes be a nightmare, but that's just the way the rules work. Next, how do we determine a filing requirement? And more importantly, like, what are the tools available? Like, how do we ask our clients what to give to us so that we can file this report on their behalf? Or how can we give them the advice to do it on their own? And so what they need to do is, I know in some foreign countries they don't get periodic account statements, but for the most part, I believe most banks are going to these periodic account statements. So they need to pull a periodic account statement to figure out when the maximum value was in their account. Most people know this, but if they have 10 or 20 different foreign bank accounts, they can get them confused. So account statements are very helpful in determining what was the max value in any given account at any time during the year. So one account, the max value of $11,000 might have been in February. In another account, it might have had $20,000 in December. And so these periodic statement accounts or account statements help us as accountants determine what the max value is. Another thing, we usually take our clients' word at face value if they don't have these periodic account statements, or if they're just fed up with this whole FBAR process. So a lot of times they'll estimate and say, yeah, I had about 15,000 US dollars in this account. And usually that works. I've never had a case where an FBAR that we have prepared had been audited or questioned. And so I think sometimes estimates are okay. In most cases, I think they're okay. Now, converting US dollars, converting like Chinese yen into US dollars, we need to pull exchange rates and convert them ourselves or have our clients convert them for us. The problem with having your client do it is sometimes they don't get an accurate exchange rate, so it's usually best for the professional to do this for them. A lot of times in the firm that I was working at, we would use awanda.com, which is a great place or a great source to get exchange rates. Lastly, what, when, and where do we report? So what to report is pretty basic. There's 6 basic things: max value of the account, type of account, whether it's a checking or a savings account or an other account, the name of the institution, the account number, the institution's address, and the account ownership. So whether it's owned separately or jointly, which is a good distinction, because on this foreign bank account report, you have to separate the accounts that you own separately on one page, which I believe there's like 6 spots. So you can fit 6 accounts on the account owned separately for one page, and then about 2 accounts fit on a jointly owned account. So you can fit 2 accounts on one page. So that's what we're supposed to report. Now, a small example or case that I had, account numbers can sometimes get a little funny in foreign countries. So they sometimes use letters. Sometimes they use the same account number for like 4 different accounts. And so they have different ways of distinguishing between the accounts. So sometimes clients might, give you one account number and tell you $50,000 when in actuality it's 4 different accounts and they all have $10,000 in them or $12,000 in them or whatever the case may be. So sometimes it's important to make sure that you have all of the account numbers. When and where do we report it? Well, the BSA is the one who basically enacts the requirement for this report to be filed. So this FBAR report goes directly to them, and it's not a part of the tax return. Recently, it was changed in 2016 to be due on April 15th, basically coinciding with the tax return, even though they don't get reported to the IRS. This one goes to the BSA, the tax return goes to the IRS. This report used to be filed or was required to be filed by June 30th with no extensions. So now, as of 2016, the BSA basically allowed for there being a 6-month automatic extension. So making it so that there's not 2 huge filing deadlines for preparers to meet for the tax return on April 15th and then FBAR's on June 30th. So that was a nice move by the BSA. They have their own filing system, so when you push e-file on your FBAR, it's completely separate. There's a whole, now that I'm in the tech industry, there's a whole different process for e-filing with the IRS and e-filing with the BSA. And so when you push submit on the FBAR, it goes to the BSA through their own filing system.